The stock market has just dropped a whopping 7.5% from its recent high of 3,534 points. In just a few days, billions of dollars have been wiped out from the market. Even top companies like Apple, Amazon, and Microsoft are down. What should you do with your retirement account during a crash? Should you sell and wait it out? In this video, we're going to cover 3 simple things that you can do for your retirement account, and then we're going to cover what's to come in the last 2 months that will impact your portfolio. Hey guys, what's going on? If you're new here, my name is Davis and welcome to my channel. Each week I make new videos on personal finance and wealth building, so subscribe and click the notification bell so you don't miss out on my next video. Alright, here are 3 simple things that you can do so you don't end up costing yourself hundreds of thousands of dollars. You might be worried about your retirement account seeing all these headlines such as lack of stimulus packages, rising cases in the US, and then huge red days in the stock market. It's normal to want to sell at times like this, but if you follow these 3 simple rules, you'll be able to buy at the bottom and then avoid crucial retirement account mistakes. The first thing you should do is change your perspective. I know this sounds like mumbo jumbo, but hear me out. A 7% drop may feel like a real gut punch, but if you zoom out and you look at where we were at the end of March and you look at where we are now, that totally changes things. Since then, we've had over 40% in market gains. Historically, September and October are very volatile months during election years. And then November's even crazier. What likely happens is people make adjustments to their investments based on who they anticipate winning the election. This is a key thing to remember when we go over things that will impact your portfolio. The next and probably the most important thing to do is keep letting your automated investments in your retirement account do their thing. We have no idea what the bottom's going to be, but the best time to usually invest is when everybody else is scared and worried. The same thing held true between 2008 and 2009. Everybody was scared, money was leaving the market, but actually the best time to invest was then. By continuing to invest and letting your retirement account do its thing, you'll get a very good average. Most people thought the stock market would continue to keep dropping at the end of March. However, since then, it's been on an absolute tear. This just shows that we have no idea what's going to happen. And the third thing you should do, just stop checking your retirement accounts. This is easier said than done, of course, when you see all these negative headlines, but just wait it out and just don't check it. Imagine if you checked your portfolio at the middle of March and then you ended up selling. You would have missed out on about 40% plus gains since then. Just remember that your retirement account is specifically for retirement. This is probably going to be decades down the line depending on how old you are. This 7% drop is just going to be a blip in the radar in the grand scheme of things. Alright, now that I've covered 3 simple rules to follow for your retirement account, here's 3 upcoming things that will definitely impact your portfolio in the short term. These 3 things will drastically increase volatility, creating huge swings in the market over the next 2 months. First thing that's coming up that the whole world knows about is the presidential election. No matter who wins between Biden or Trump, there will be extreme swings in the stock market. With an estimated 80 million mail-in votes, it's going to take a ton of time to process all the votes. We won't know who's going to win on election night on November 3rd. It can take anywhere between 2 weeks and a month. During that time, there will be huge uncertainty as to who the next president will be, so the market will have equally huge swings. The second thing to keep in mind is if Biden wins, Donald Trump will try to contest at the Supreme Court level. If this happens, then there will be even more uncertainty created, and then creating even more volatility in the market. Last thing to keep in mind is a return to potential lockdown in certain states where cases are rising exponentially. A tool that you can use to track all this volatility is something called VIX. Just look up VIX and you'll be able to see the volatility increase and decrease. At the height of the volatility, at the end of March, it was around 80 points. Currently, it's about 38 to 40. These 3 key things will cause massive volatility in the market, so don't forget about the 3 rules I told you about earlier. And if you're new to retirement investing and you're kind of freaked out and you want to know the difference between an index fund, mutual fund, and an ETF, I previously made a video which I'll link up above and then down below. Just a quick recap, the first thing to do is don't check your retirement account, don't sell, and then keep your automated investments going. If you've learned something new and you want to help me out, please click the like button. Or if you have a friend who's freaking out, share this video to them and let them know that everything's going to be okay. Remember, always do your homework, always do your own due diligence. This video is for entertainment purposes only. Thanks for watching. I'll see you guys next week.